Good morning, and may I, on behalf of the Public Accounts Enterprises Committee, warmly welcome all the officials here this morning. Officials of the Ministry of Finance and the Trinidad and Tobago Mortgage Bank. My name is Wade Mark, and I'm the chairman of the Public Accounts Enterprises Committee. Now, the Public Accounts Enterprises Committee has a mandate to consider and report to the House of Representatives on the audited accounts, balance sheets, and other financial statements of all enterprises that are owned or controlled by or on behalf of the state. The Auditor General's report on any such accounts, balance sheets, and other financial statements, and of course, whether policy is carried out efficiently, effectively, and economically, and whether expenditure conforms to the authority which governs it. Now, the purpose of this meeting of our committee is to conduct the following: an examination of the audited accounts, balance sheets, and other financial statements of the Trinidad and Tobago Mortgage Bank for the financial years 2019 to 2022, and follow up on the implementation of the recommendations contained in the committee's Omnibus report in the 11th Parliament. The committee is desirous of hearing the challenges being faced by the key stakeholders at Trinidad and Tobago Mortgage Bank in an attempt to determine some of the possible solutions to these challenges. The role of the committee is to help the Trinidad and Tobago Mortgage Bank improve its delivery of services in an efficient, effective, and economic manner. This meeting is being held in public and is being broadcast live on the Parliament Channel 11 and Radio 105.5 FM and the Parliament's YouTube channel, ParlView. Viewers and listeners can send their comments related to today's topic to the following addresses. Our email is parl101@ttparliament.org. Our Facebook is facebook.com/ttparliament. And of course, we have X, formerly Twitter, at TT Parliament. I'll now invite my colleagues to introduce themselves, starting with my colleague on my immediate right.
Good morning, everybody. I'm Hazel Thompson Ahi, member.
Hi, good morning. Stephen McClashy, member.
I'll now invite representatives to introduce themselves, beginning with officials from the Ministry of Finance, to be followed by the officials of the Trinidad and Tobago Mortgage Bank. So, Ministry of Finance.
Good morning, Chairman, members of the committee, colleagues, TTMB. My name is Michelle Durham Kissoon. I am Permanent Secretary in the Ministry of Finance.
Good morning. I am Sharon Mohammed, Director, Economic Research and Policy Coordination, Ministry of Finance.
Good morning, everyone. I am Radhika Kelvin, Research Officer 1, Ministry of Finance.
Good morning, everyone. Patrick Ferreira, Chairman of the Board of the TTMB.
Good morning, Chairman and members. I am Robert Green, the Managing Director, Chief Executive Officer of Trinidad and Tobago Mortgage Bank.
Good morning, everyone. My name is Brent McPhee, Chief Operating Officer and Corporate Secretary, Trinidad and Tobago Mortgage Bank.
Good morning, everyone. My name is Robin Lewis, Director of the Board of the TTMB.
Good morning, Chairman and members. My name is Laurette Walker. I'm the Chief Financial Officer of the TTMB.
Good morning, Chairman and members. I'm Wendy Schoon-Huggins, General Manager Mortgage Services at the Trinidad and Tobago Mortgage Bank.
Invite the direct, well, all right, may I invite the Permanent Secretary, Ministry of Finance, to make a brief opening statement at this time?
Thank you, Chairman. Good morning again, Chairman, and members of the committee and members of the viewing audience. Thank you for inviting us to this inquiry, this follow-up meeting. We are happy to provide any clarification that the committee may need, and we look forward to fruitful deliberations this morning. Thank you.
Yes, and we have a choice between the chairman of the TTMB or the managing director. So I'll leave that up to both of you all to make opening remarks, decide which one, managing director or the chairman of the TTMB.
Good morning, Chairman and members of the Public Accounts Enterprises Committee and members of the viewing audience. I am Patrick Ferreira, Chairman of the Board of Directors of the Trinidad and Tobago Mortgage Bank. The Trinidad and Tobago Mortgage Bank Limited, formerly Trinidad and Tobago Mortgage Finance Company Limited, is a state-affiliated company with a diverse stakeholder environment. Its major shareholders are the National Insurance Board of Trinidad and Tobago and the Minister of Finance Corporation Sole, to which returns on investment are expected. We are the administrator of the government's Affordable Housing Finance Program for first-time homeowners. We collaborate very closely with the Ministry of Housing and Urban Development and its housing agencies, the Trinidad and Tobago Housing Development Corporation and its subsidiaries, and the Land Settlement Agency. We are a financial institution operating in the local financial services sector and are exempt from the Financial Institutions Act, however, voluntarily reporting to the Central Bank of Trinidad and Tobago and regulated by the Securities Exchange Commission. Our operating model and strategic framework incorporate all the tenets of a risk-averse financial institution, combining profitability and performance targets with delinquency management, talent development, and community outreach. We are committed to our mandate to provide affordable housing finance to the citizens of Trinidad and Tobago and support the government's housing programs. Over the 4-year period 2019 to 2022, the period under review, our financial performance reflects an increase in assets from 4.2 billion in 2019 to 5.1 billion in 2022, or 20% increase. Profit before tax for the period totaled 513 million. Dividends paid amounted to 202 million. 5,405 mortgages totaling 2.7 billion were granted, of which 1.8 billion were under the Affordable Housing Finance Program. Our mortgage portfolio grew from 3.5 billion in 2019 to 4.29 billion in 2022 net of mortgage sales, with a customer base of 17,575 accounts under administration. Thank you very much.
Yeah, well, thank you very much, Chairman of the TTMB. As I said, once again, may I warmly welcome the officials of both the Ministry of Finance and the TTMB, Trinidad and Tobago Mortgage Bank. Before I get into areas of clarification from the accounts before us, I would like to ask the TTMB to share with this committee, and through this committee, the public, the services you offer in a little more detailed way, and how can members of the public access those services? What are the modes, models, gateways that members of the public can use to access the facilities, loan facilities of this particular bank, TTMB? So if you could give us like a overview of that, it would assist the public in better understanding your role, functions, responsibilities, and duties. So I'd like someone to provide us with that kind of appreciation, first of all.
Thank you, Chairman. Thank you for the question. During the period under review 2019 to 2022, Trinidad and Tobago Mortgage Finance, which is what it was called at the time, was essentially a mortgage finance institution which provided mortgage financing to the Trinidad and Tobago public for the acquisition of homes. Traditionally, we provided mortgages for middle and low income housing. However, over the last 15 years, we've removed any ceiling from our lending, and we can provide mortgages to anybody wishing to acquire a home, mortgages to people who wish to acquire an investment property. It must be residential. We also provide loans for other purposes using the residence as security, for education, for health, for investment, for other types of loans that our customers may wish to access. We provided mortgages in two areas. The first area is for the middle and lower income housing under the government's housing finance program, the Affordable Housing Finance Program, commonly known as the 2 and 5% mortgages for property values $1 million and under in respect of the 2% loan, and 1.5 and between $1 million and 1.5 million for the 5% loan. We offer these mortgages essentially to people who are beneficiaries of the Trinidad and Tobago Housing Development Corporation, but we do offer those mortgages to persons buying properties outside of those properties built by the Housing Development Corporation. We promote our business through social media, advertising in the newspapers. We have an online facility that allows customers to communicate with us, to make appointments for assessments, for applying for mortgages. We have business development officers who travel throughout Trinidad and Tobago promoting our product and assisting in the provision of information to potential buyers of properties, and of course promoting our products. I'm taking the opportunity, Chairman, to address your specific question as it relates to Trinidad and Tobago Mortgage Bank. I'm happy to report that in January of this year, the merger between Trinidad and Tobago Mortgage Finance and Home Mortgage Bank occurred, and in March of this year, we were rebranded to Trinidad and Tobago Mortgage Bank. I'm taking the opportunity to share that under the merged entity, the services offered by Trinidad and Tobago Mortgage Bank has been expanded to include those business activities previously done by the Home Mortgage Bank, and those include the provision of project financing and commercial financing, project financing primarily for the construction of residential units, single and multiple, being offered to developers, commercial financing for commercial buildings, and more significantly, to the purpose of the merger, is that the TTMB now offers investment products to the public. Home Mortgage Bank would have established certain mortgage-backed investment products, namely a mortgage participation fund, a salmentary fund, and some collateralized mortgage obligations. Those are currently being offered, albeit still under Home Mortgage Bank, but as a subsidiary of Trinidad and Tobago Mortgage Bank. And we offer as well those products to the public, to institutional investors, to high net worth individuals. And by that means we are utilizing effectively the strengths of Home Mortgage Bank in respect of its capital market expertise.
What is the size of your workforce given the merged entity?
Currently it's around 220 people.
220 people. You talk about rebranding taking place at the end of March. Could you tell us if the actual process has been completed?
With respect to the branding,
Not the branding.
The merger?
Yeah, in terms of the merger. Has that been completed 100%? Or is it 90% completed? 70%?
is not 100% completed, Chairman. In January of this year, Trinidad and Tobago Mortgage Finance acquired 100% shareholding of Home Mortgage Bank. And under that scenario, the merger was completed. But the design of the merger includes the distribution in specie, which is a methodology used to merge two organizations. And it requires the transfer of assets and liabilities of Home Mortgage Bank to the Trinidad and Tobago Mortgage Bank, and the subsequent dissolution of Home Mortgage Bank. That is really the third phase of the merger process as has been designed, and that is ongoing. We expect that aspect of the merger to be completed within the next couple of months.
Okay. So, meaning we will go into 2025, and you anticipate the completion of this process would be before the end of 2025?
Certainly before the end of 2025, Chair. We at latest the first quarter in 2025.
Okay. All right. Just want to also ask whether the transition from the Ministry of Housing and Urban Development as your former line ministry to now the Ministry of Finance. I wanted to find out whether there are any major challenges facing the new entity given this new relationship.
Chairman, the relationship between our company and the Ministry of Housing was a favorable one, and we continue to have a relationship with the Ministry of Finance through certain reporting requirements. The transition occurred in April of this year, and the working relationship between ourselves and the Ministry of Finance has been favorable. And it really continues along the lines of the relationship we had even before the changeover to the line ministry from the Ministry of Housing to the Ministry of Finance.
So can we say that you have two line ministries?
No longer, Chair. I'm sorry, I didn't let you finish your question.
Yeah.
Apologies.
I'm just trying to find out, is there one line ministry, which is now the Ministry of Finance, and your previous line ministry, Housing and Urban Development, you continue to have an excellent relationship with that ministry, but there's now a new line ministry in the Ministry of Finance. Am I right?
Yes, you are correct.
Okay. All right. The other thing I'd like to find out is your strategic plan that you had in place when you were TTMF has undergone some review in order to reflect the new reality. The consultant that you had engaged, or that has been engaged, is it PricewaterhouseCoopers, am I right?
Yes, it is.
Could you give us a status report on your new strategic plan in terms of it being reviewed in the context of your new reality?
Chairman, the strategic plan for the Trinidad and Tobago Mortgage Bank was prepared in November or December of 2021. It was done with the assistance and facilitated by PricewaterhouseCoopers. It was prepared and finalized at that time, and it was accepted as by the then Merger Steering Committee as the strategic plan for the new Trinidad and Tobago Mortgage Bank. Subsequently, however, given the passage of time, which was between November and now, and post the merger in January of this year, we took the decision to revisit that strategic plan for the passage of time and, of course, to consider current circumstances under which we operate. We did that revisit back in March of this year, involving all of the executive and management team. It was facilitated again by PricewaterhouseCoopers. We, of course, would have had to update the strategic plan with current information. There were some changes to strategy which we would have recorded at the time of the meeting in March. And I'm happy to report that that strategic plan had been proposed to the board in September of this year, and it has since been approved by the board.
Has it been approved by the Minister of Finance or the Ministry of Finance?
It has been submitted to the Ministry of Finance in keeping with the requirements of the State Enterprises Performance Monitoring Manual.
Can we have a copy of that plan?
Yes, you can, Chairman.
All right. One of the questions I wanted to ask earlier occurred to me now. I know with mergers you do have challenges, particularly the human resource challenge at times. Do you anticipate in your finalization of this merger, no later than the first quarter of 2025, probably, do you anticipate any dislocation, displacement of your human resource base in this whole merge process, or do you anticipate that there will be a smooth transition into your final merged organization?
Chairman, the decision was taken by the shareholders and different stakeholders that there will be no loss of jobs under the new entity. Part of the work that was done, that was facilitated by PricewaterhouseCoopers, was the development of a transition plan, which would have seen all of the officers in both organizations transferring into the proposed structure of the new organization. That proposed structure, as well as the strategic plan, was proposed to the board and has since been approved. No person has lost their job. I think the percentage is around 87% of the current staff will maintain their existing job. Those 13% who will have slightly different roles, I think it's as much as a year and a half ago, those transition plans were shared with those individuals. In fact, a transition plan was shared with all of the members of staff, executive management and staff of the two organizations, and everybody knows what their new role will be under the new organization.
Now, I know one of the areas of stability, and if I dare say happiness, that would be able to keep any organization in a state of top level performance in terms of its efficiency and effectiveness is a satisfied and workforce. Can you advise this committee whether all outstanding or you are working towards concluding, or let me put it another way, what is the status of collective agreements, industrial relations, labor relations, particularly as it relates to collective agreements for this new entity? Our information is that you still have outstanding collective agreements for going back to 2015 up to the present time. I'm not too sure if I'm correct on that, but you can guide me and let me know what is the current state and how you intend to finalize that arrangement.
Chairman, again, the decision was taken that the existing union, which is the Banking Insurance and General Workers Union, BIGWU, will continue to be the recognized union under the new entity. With respect to the collective bargaining agreements, the last collective agreement expired in December of 2019. So we have outstanding 19 to 21, 22, and then a subsequent 3-year period. We have been in discussion. Proposals had been agreed to by the board and shared with the CPO for to obtain its approval. We've advanced the process with the agreement of the union that it be reported, and this is a normal step in these issues. It be reported to the ministry as a negotiation that has broken down. We have agreed with the union that we will develop a memorandum of matters agreed. Again, a step towards bringing the outstanding collective agreement to closure. That memorandum of matters agreed is to be shared with the board, with this new board, before we proceed to execute that document. In short, that is still outstanding for the subsequent periods, and we're working closely with the CPO to get that matter resolved. You make reference to the year 2015, and it is that there is an outstanding management compensation that dates back to 2015.
Okay. In terms of challenges, re-arrears, is there a challenge here in terms of non-performing loans facing the bank? And could you give us a status report on that for the period 2019 to 2022? And how are you treating with that?
Chairman, I'm happy to report that prior to COVID 2019, our arrears ratio was 3.57% of the portfolio. Going into COVID and arising out of the impacts of COVID on people's employment levels of income, etc., during the subsequent period up until now, and in the height of COVID, the arrears figure went in excess of 7%. We would have accommodated the customers in keeping with the government's request to have a deferral of 3 months. That was done, and I think the figure is in excess of 3,000 customers who would have accepted that concession. We would have added on the 3 months installment onto the end of their mortgage, and therefore that would have regularized that aspect of the concession that we would have given. However, there continues to be challenges even beyond the so-called end of COVID. There continues to be challenges with customers who have had reduced incomes, loss of jobs, etc., etc. I'm happy to report that between last year and now, our delinquency ratio has come down to just over 6%. We have obtained approval from the board to bring on additional staff to assist us in bringing us back to the level that it was pre-COVID. We do have, as part of our delinquency management policy, strategies to assisting our customers in getting past this particular difficult period by way of refinancing of debt, by rescheduling of debt, making concessions or allowing for arrangements to be put in place for persons to pay up their arrears. And we continue to work very closely with our customers to bring the arrears level down. I do. I would ask one of my colleagues to tell us what the figure is. There is a dollar amount associated with that, yes. Sorry.
This be current?
No, this is not current. Okay, as at October the 11th, 2024, the delinquency ratio above 90 days is 6.08%, and with a portfolio balance of $5.7 million, the delinquency ratio of above 180 days is 4.66%.
I think my colleague, Mr. McClash, would like to follow.
Right. On the same trend, but just slightly different in terms of risk for the bank going forward. I would like to get an idea from your perspective, given that we're seeing loans, seeing delinquency rising, and therefore I suspect you will be putting more stringent measures in place going forward and ensuring that people can actually afford these loans and that they're not putting it at risk. From the bank's perspective, do you see going forward, how does it, no, let me phrase it another way, how does it impact the bank's business in terms of growth, stability in an environment where you're having these difficult economic issues and so on? What is the prognosis from the bank's perspective on what the mortgage scene would look like maybe 3-5 years down the road?
Thank you for the question. The economic outlook has been favorable. Unemployment rates have come down. There is several reports that indicate that the local economy will grow in 2024. So that speaks positively for our business. We do have what we call early warning signs, signals that we adopt. We look at different industries, information about employment, unemployment, layoffs, etc. in the various industries. And from a risk management standpoint, that is how we manage our portfolio by way of those persons working within those specific industries. I'm happy to report, yes, you used the words delinquency rising, but we are seeing a downward trend in the arrears. In response to your question as to the impact on our business, significant to the impact is that when we go to market to borrow, we utilize our mortgage portfolio as security. We utilize our mortgages for the issuance of the investment products, of which I spoke earlier. So that we have to have a robust portfolio of mortgages with low arrears for us to be able to utilize those mortgages to securitize our funding arrangements. So it is essential for us that we manage our arrears in a manner that would see it come down over time. So it's trending downwards. 6.08 is what I said. We've taken steps to bring more resources on, and we'll be working feverishly, excuse me, over the next few months to ensure that that delinquency rate goes down even further.
saying something? Okay, but unrelated. I looked at some of the submissions you made, and in wearing another hat as Minister of Labor, I'm interested in finding out your approach to hybrid work. What is your model? What is the model being used, and how is it working for you?
We have not yet instituted a hybrid work arrangement. What we are doing, we would have introduced a rotational system back in COVID. We would have introduced alternative work arrangements. For example, we would have provided to our staff facilities for them to operate from home. During COVID and even subsequent to that, we do have an alternative work policy that's in place that allows the accommodation of staff who have need to work from home, and that is accommodated on a case-by-case basis. We do have in our business plan for this year, for this quarter, to establish or consider a hybrid work arrangement for the organization, against mindful, of course, of the fact that we are a customer-facing organization. We still very much have customers who prefer to walk in and sit in front of a desk as opposed to being interviewed or having a discussion with an officer on the telephone. So the consideration of the hybrid work arrangement is to be completed before the end of this quarter.
Thank you. Chair.
First of all, I really wish to say that it seems as though Christmas came early for this committee, in that many times we start an inquiry such as this and we are very discouraged because there is such a large backlog of accounts. And here we have an entity that seems to be doing quite well in terms of its obligations. So I really need, first of all, to compliment you in that we don't have to come and fret with an organization, say, why haven't you submitted accounts since 2017, 16, and so on. So thank you for that. I have been impressed by what you've done with your buildings and all of the expansion you've done outside of the building with your car park and so on. But I still wonder the cost though. Can you say the cost of the merger that you've embarked upon? And favorite color for your buildings, as though I designed them myself. Love the color. But tell me, what is the cost? And are there costs outstanding? Not only the physical plant and so on, but you would have had to change all your correspondence and all of those things. So the cost must be phenomenal. Can you share that with us?
Yes, thank you for the question. It would have cost us just over $800,000 to repaint the exterior of the building. We got interior design assistance from an architect, which would have cost us $100,000. The work with respect to our materials, letterheads, etc., came up to somewhere around $200,000. We still have work to do. We would have recarpeted the interior and refinished the interior as well. That, as I remember, it was somewhere around $400,000. We would have done similar works throughout our branch network. We do have some more work to do in the interior with respect to the cubicles. We intend to refinish the cubicles in the new colors. That is going to happen in the new year.
Mm-hmm. Within your organization, because things are working so well, I suppose that people are very happy there. do you have any family-friendly policies? In that, have you instituted for the benefit of your workers things like paternity leave, any nursery facilities? Do you have anything like that happening there?
Family friendly, yes. I think that I can proudly say that we do have a number of facilities for staff. We do we have paternity leave? I think we do, 2 days.
Excuse me?
2 days.
2 days?
Yes. 2 or 3 days, yes. We considered some years ago the establishment of a nursery. And when we considered the risks associated with facilitating that in our building, we decided against it. Interestingly enough, at the time that it was considered, and even up till now, the number of people who wanted the facility was quite low. So it's something that we put aside. We didn't consider it beyond that. We have all of the normal leaves that organizations have. Sick leave, we have accommodation for extended sick leave. Yeah, I think we cover everything that exists in industry.
All right. Thank you.
Thank you very much. I wanted to ask Mr. Green about your internal audit function. Can you advise this committee what has been the challenges facing this organization in getting on board a manager for your internal audit unit? What has been the challenges? Or should I put it another way? Do you have, as we speak, a manager with responsibility for your internal audit function or unit?
Chairman, I'm happy to report that effective the 3rd of September, we've employed a manager internal audit. And yes, that manager is responsible for the internal audit function. Let me add, though, that Home Mortgage Bank, our subsidiary, still uses an outsource, I always find this funny to say, but an outsource internal auditor, and that continues, but there is every intent over the next 3 to 6 months to incorporate the internal audit function under the two organizations under that of the Trinidad and Tobago Mortgage Bank.
Excellent. Okay. You want it?
What is the interest on loans?
Let me speak to the, excuse me. Let me speak first of all about the government's affordable financing program. That program has two interest rates, 2% and 5%. The 2% facility targets family incomes of $14,000 and less for property values up to $1 million, and that family must be a first-time homeowner. It accommodates $20,000 for what is referred to as white appliances to be included in that loan. With respect to the 5% facility, it caters for family income up to $35,000 for property values ranging between $1 million and $1.5 million. I'm happy to say that those two facilities are offered across the board for properties across Trinidad and Tobago, and not only the properties built by the Trinidad and Tobago Housing Development Corporation. We also have a third rate that we fondly call open market rate, which is currently at 6%, and that 6% facility is offered to home buyers who fall outside of the 2 and 5% facility. I want to emphasize that that 6% rate, that open market rate, I should say, is offered to any income level and any price level. It's something that we've been doing for the last 15 to 17 years, and it's something that we want the public to be aware of insofar as our product offerings are concerned. And let me add, if I may, that one of the fundamental reasons for the merger with Home Mortgage Bank and to bring their capital market expertise under one roof is to be able to raise funding at rates that can afford us a reduction in that 6% rate. So we currently have a liability management strategy that we're operating. The investment products that we're offering, once we raise sufficient funds, would allow us to reduce our cost of funding, in which case that reduction will be passed on to the borrowers by way of a reduction in the 6% rate that we currently offer.
Let's do another question now. Do you have a penalty for early repayment of loans?
No, we do not. As I continue to tell our customers, if you get your mortgage today and you win a lotto or you come into cash the following day, your effective cost will be interest for 1 day. We don't charge penalties on prepayment at all.
And all of these wonderful things that you do, that's widely advertised?
It is widely advertised as far as we are concerned, certainly by way of our brochures, by way of our website, by way of our advertising. We recognize that we are operating in a very competitive environment, and we've been saying for a long time that one of our competitive advantages is the no prepayment penalty on our mortgages.
Wish I could go back in time.
And not only, and allow me to say that we're not talking full repayment, we're talking partial repayment as well. People are able to make lump sum payments towards their mortgage, which ultimately will allow them to manage their interest costs over the life of the mortgage.
I really think you ought to embark on more aggressive advertising. I'm sure there are lots of people out there who are totally unaware of what is happening.
Okay.
So I look forward to seeing and hearing more of this entity that seems like a savior to many people in the community.
Yes, madam.
Senator Ahi, Thompson Ahi. Mr. Green, the whole issue of disposal of repossessed properties. It seems to be a vexing problem to some extent, but you could explain. If you could guide this committee by providing us with the specific steps undertaken by TTMB in the sale of a property, right, via private treaty.
Chairman, I've just been passed a note. Let me say first of all that we continue to be in contact with our customers from day one of arrears. We have our delinquency management policy requires us to make phone calls to customers when they're 15 days late. And we have different tactics that we use as the arrears increases. We offer accommodations to our customers, which sometimes are successful, other times they're not. Some customers who are unable to reverse their arrears situation, they are the ones that we have to take action on. And the first step really, after having gone through all the hand-holding, if I can call it that, is to seek from the court an order of possession. Once that happens, we will start the process of advertising the property for sale, and we do that by way of public advertisements in the newspaper, on our website, and otherwise. The process requires us to invite people to come to visit the properties. We do have, apart from the order of possession by the court, we do also offer persons the opportunity to in effect hand in their keys. And that is something that happens from time to time. So once we've taken, once we've taken possession of the property is when we advertise it. We invite people to submit bids for those properties. We, of course, will know what the outstanding balance is on the mortgage. It will be the balance plus all the outstanding interest arrears, and we will then, on the basis of the bid submitted and the valuation that we will get of the property at the time of potential sale, we will assess the bids, make a determination as to what is the best bid in keeping not necessarily the best price, but certainly we go through the process of assessing the dollar amount and the bidder's ability to raise that funding, sometimes through us or otherwise, and it is on that basis that we make the decision to sell the property. If there is an excess of the sale price over the amount owed, that money is paid over to the customer. If there is if the selling price is lower than the amount that is owed to us, and once we have the order of possession, the order of the court, we continue to follow with that customer through various means, beginning with a means and assets test to determine their ability to pay up the difference, and we continue to pursue them in that regard.
But would you say that on a balance, you have been able to have the value in terms of outstanding commitments, the amount that is owed normally would exceed, or I should say the sale price normally would exceed the amount owed, so that the customer would be a beneficiary at the end of the process rather than a continued liability to TTMB. What is the state of play when you try to balance the scales, or how is it working out?
Chairman, I would say a good 8 out of 10 is a favorable outcome, where we get a selling price in excess of the amount owed.
Okay, yeah. Now, when it comes to persons who are approaching TTMB for a mortgage, and they have to go through all the procedures, including having them engage an attorney at law to complete the paperwork, legally speaking. the practice is still to allow the person who is seeking the loan to secure his own attorney, or is an attorney imposed on that individual by TTMB? Could you clarify for us?
Chairman, we have a panel of attorneys. Currently, the panel consists of 26 attorneys. We don't impose one. We allow the customer to choose from one of those attorneys to do the legal work. The attorneys on our panel are essentially to seek TTMB's interest, to ensure that there's proper title, that they and for the proper preparation of the mortgage documents. And so yes, the customer is required to choose from that list. However, in respect of the conveyance, which is the conveyance from the vendor to the purchaser, the borrower can decide which attorney he wants to use for that conveyance process.
And how do attorneys at law access this role if one is interested in becoming part of that role that you have under your portfolio?
Chairman, they are required to apply, to write and apply to us. We have criteria that we assess those applications against. Experience in conveyancing and mortgage type law is a significant one, and we will in fact consider any request on a case-by-case basis. I can say, however, that with 26 attorneys on our panel, we're currently going through a process of rationalizing that panel in the interest of ensuring that we have the best panel of attorneys to support our business.
And that panel of attorneys, both firms and individuals, or?
We do have some firms and we do have some individuals, yes.
And would you indicate, would you say from your own experience, these, or this panel have been rotating, or do you think that from your experience, they have become like the Northern Star, constant in terms of their presence? Because the reason why I'm raising this is that you need a competitive environment, and of course you need talent, experienced talent that you have confidence in. So I'm not mitigating or minimizing those important criteria. But how do you ensure that you don't have permanent fixtures within that panel? For example, can you put in writing for us, if you have 26 attorneys at law on this panel, can you share with this committee what would be the period that they have served mortgage finance? 10 years, 15 years, 20 years, 25 years, 30 years? How would you describe it?
I'm not in a position to give that information now. We do have 2 firms that are our corporate attorneys, well, 3 actually. So I'm familiar with the fact that they have been with us for quite some time. But our panel is not limited to those 3 corporate attorneys. And if the committee wishes, we can provide that information in writing.
Yeah, you can. That's no problem. Now, the other thing, you could put that in writing and send it to us. The other thing I want to find out or try to clarify I saw in your financial statements debt, short term, and then you have long term. Just elaborate first now. When we talk about the short term debt, what exactly are we talking about? And when you talk about the long term debt, how are you faring in meeting your obligations to your various clients, if you want to call it, on a regular basis? And I saw where the government, is the government guaranteeing or the government just giving a loose security? Is there a letter of comfort or a letter of guarantee coming from the government for long-term loans taken out by TTMB? Just explain or clarify.
To answer your last question first, Chairman, no, the government does not provide us with a guarantee on our borrowings. And to explain the difference between short-term and long-term, we do face the capital market for funding. Short-term is typically a year and less. We will choose short-term funding based on availability, based on need, based on our cash flows, based on the interest rates that it's going to cost us, ensuring, of course, that we keep our costs within a particular measure so that we could continue to lend at 6%, say, with a spread that is favorable. The long-term loans are, in today's circumstances, maximum 4 or 5 years. And that is simply because the financing regime that we exist in is limited to 4 and 5 year paper. The short-term paper would typically be 3 month, 6 month, 9 month, 1 year loans from commercial banks. I want to ask the names and types of lending arrangements. I'll pass to the CFO for her to expand on. Laurette?
Yeah.
Sure. Thank you, Chairman. Right. What I want to say is that the type of funding instrument we choose between short-term and long-term is really dependent on the interest rate environment that we are operating in. Within the last couple of years, we have been facing a rising interest rate environment because liquidity has been on the decline, and there's a lot of participants in the marketplace. So in order to balance what our CEO would have just indicated in terms of borrowing cost, we have had to have a blend of short and long term. So that's what we do. We go to the capital market. The long-term debt is really 4 to 5 years, and it's bonds and a combination of syndicated loans. So what we do, we engage arrangers to reach out to the capital markets for us, and we would pay them a fee, and then we raise debt in that way. Just to share with the chairman and the committee that for the period under review, we would have raised $3.3 billion worth of debt, both short and long term. For the year in 2023, just to extend out a little bit, we would have also raised $2 billion worth of debt. So the TTMB has been very successful when we go out to the capital markets. We are actually sometimes, if not fully subscribed, oversubscribed in terms of funding. Now with the partnership with Home Mortgage Bank, again, with their expertise, we expect that this pattern will continue, and we are hoping that the interest rate environment will become more favorable so we can achieve the targets that we've been setting in the new strategic plan that we will have promised to share with you. Yes?
And if I may, Chairman, answer the last part of the question, I'm happy to report that we have had no challenges in meeting our debt obligations from the standpoint of the repayment of the principal as well as the payment of interest. We have had no issues with that.
And
Chairman, through you.
Yes, sir.
Through you, Robin. I just want to clarify though that the business that you are in, you would want to maintain some level of flexibility in your funding regime to be able to respond to market conditions in the best interest of the client. Because the ability to price your mortgage for market is dependent on. Sure. Your ability to price mortgages for your client is dependent on your funding cost. And what you want to do is have a blend that allows you to reassess what market is giving you or offering, and the ability to work in tandem with market for the best option for your client. So the funding mechanisms that is deployed by the institution to date, the hybrid of both short and long term, in my view, currently gives the best option for the client and the institution the ability to be able to be flexible, to allow you to be able to offer good rates to the clients.
Mr. Green, in terms of subsidy, given the fact that, of course, you're keeping your interest rate, mortgage interest rate, low for middle and low income earners, consistent with the government's policy, re-affordable homes and housing. Is there an arrangement whereby you are subsidized by the government? And how is that done?
Yes, Chairman. The Affordable Financing Program is in fact subsidized by the government of Trinidad and Tobago. Using a simple example, when we lend at 2% and raising funding at say 5%, the government subsidizes the difference between the cost at the return of 2% and the cost of 5%, and we charge 1.5% on top of that for a service fee associated with the origination and administration of these mortgages. So the subsidy is in fact something that happens for every loan that we grant under the 2 and 5% program.
Now that we have shifted from housing, Ministry of Housing and Urban Development, to finance, can you share with us, what mechanisms have been put in place by the Ministry of Finance, right? Or what steps would have been taken by that ministry to ensure a smooth transition in this new entity, given what we had before with Ministry of Housing, Urban Development. Now you have the Ministry of Finance as your new line ministry. Anything you'd like to share with us as it relates to challenges in the transitional period, or everything, as far as you are concerned, would have been put in place to ensure a smooth transition?
Chairman, the discussion around the merger would have started some years ago, and it received the support of a number of ministers of finance. When the work for the merger commenced back in 2021, it received all the support that was necessary from the current ministry and minister. The Minister of Finance Corporation Seoul is a 49% shareholder in the new entity, and all of the decisions taken with respect to the merger would have received the blessings of both shareholders, the National Insurance Board and the Ministry of Finance Corporation Seoul, and it is with the support of the Ministry of Finance that we have been able to execute the merger in the way that it occurred, which to our mind has been very smooth. Naturally, with various stakeholders involved in the process, there would have been a lot of collaboration and consultation taking place, and that occurred, which is why we're at where we are now.
Okay, thank you, Chairman. As Chairman TTMB had indicated in his opening remarks, the transition was facilitated by a steering committee, yes? And the steering committee was constituted by a number of stakeholders, including a member of the staff member of the Ministry of Finance. So that would have facilitated the smooth transition that has occurred and is in fact occurring. However, our relationship with this organization, TTMF, now TTMB, is not new. We have been working closely over the years, particularly with respect to the affordable housing program. So it's just that now we have a line ministry role and a role of corporate governance. But the transition has been smooth. We continue to facilitate the work of the now TTMB. So by and large, the role of the Ministry of Finance, while it has expanded, there are no major changes.
Okay. Mr. Green, in terms of the internal audit function, are there any additional resources required now that you have a manager of that internal unit on board? Do you anticipate any major challenges facing this unit? Do you anticipate any additional resources that you might require to strengthen that internal audit function?
Chairman, thank you for the question. As part of the work in transitioning the two organizations, a decision was taken to expand the internal audit function by one position, that is of a senior internal audit officer. That person has in fact been identified. We do have a transition plan, which is intending to see us transition from what we now consider to be a hybrid internal audit arrangement utilizing the outsourced audit firm, and it is our intent to transition all of the internal audit functions of Trinidad and Tobago Mortgage Bank under this one department, internal audit department. We, of course, over the next few months will continue to assess the resource requirements as we transition into the new full-fledged and fully functioning internal audit department, and we'll make a decision as to whether additional resources are needed.
In terms of outstanding mortgage commitments, and I know that you have attempted, well, not only attempted, I think that you have walked us through the process of treating with this matter, and not necessarily and so on to jumpy people, put them under excessive pressure by doing a number of things that you have mentioned. But in spite of your best efforts, you will reach a point where it is extremely difficult for the individual to satisfy his or her mortgage commitments to the organization. What is the situation with write-off of loans ultimately when water is more than flour. When the person cannot meet their obligations, and you realize that you just have to establish a provision in your accounts to write off these bad loans or debt because the individual cannot afford to meet their obligations. Do you have that experience, and what is the quantum over the years? So like if we talk about 2019, Mr. Green, to 2022, can you indicate to this committee what has been the experience 2019, 2020, 2021, 2022 on an individual scale, and then what the overall figure, or is everything okay?
Chairman, let me start by saying that yes, we do do provisioning in our books, which would help us to accommodate the fact that some of the loans are non-performing. We do that on a monthly basis. We do that as a special exercise at the end of the year, where we look at the arrears portfolio and those chronic arrears and make a determination based on the valuation of properties associated with those arrears as to what kind of provisioning that we do. We do specific provisioning and we do general provisioning, and any loan that for which there is a shortfall after sale will be written off against that provision. But we still have a responsibility as a financial institution to continue to pursue those individuals, and we do so by way of a means and assets test, which is conducted on the customer, and depending on what that shows up, we will make a decision as to whether we go forward to recover the shortfall. That is standard practice, is what is used by financial institutions. The details of it, I can share with the board that we do report on shortfalls in sales, report to the board on a quarterly basis. And but I don't know that, certainly the information that I have before me, we don't have that information to give you now, as you've asked, and we will be able to provide that information in writing.
Yes, go ahead, Mrs. Thompson.
You have some mortgages deemed completed and but not yet approved, or approved, sorry, but not completed. Could you explain what are some of the problems that prevent a mortgage application moving from one stage to the other? Perhaps you can, may I hear from Wendy Schoon-Huggins? I haven't heard your voice.
Okay, sure. In that report, through you, Chairman, the completed, the two categories that you asked about are completed and not yet, and approved but not yet completed.
Yeah.
The completed transactions are those on which we have already disbursed funds, and the approved transactions are those that are in the process, going through the natural course of the application.
What prevents moving from one stage to the next?
Well, it would be that there are certain things that have to take place. The title search has to be done on the property. We have to get the report from the attorneys. We have to ensure that all documentation that is required is in place. We have to complete the KYC, the Know Your Customer requirements, and ensure that we are adequately comfortable with the documentation. The attorney reports to us on the title. Once we have a satisfactory title, then we can proceed to disburse the funds.
So it will be approved without a satisfactory title?
Yes, the application is approved subject to satisfactory title search, submission of all required documentation, satisfactory credit reports. So the process naturally goes through the person applies for the loan, an assessment is done on whether they qualify for the facility. They submit the required documents for themselves and on the property that we're going to hold as security. The attorneys then do the search, and the search encompasses both a search on the customer to ensure that there are no judgments, etc., registered, and a search on the property to ensure that it's satisfactory title to the property. It's only thereafter that we are in a position to disburse funds.
Thank you.
So, Chairman, to you, just to clarify, sometimes the approved, not yet book portfolio can constitute the time for completion, documentation for a particular development. So there may be a development where we have 100 units, for example, and those units are in different phases of completion, but we have approved and pre-qualified people for those units. The timing of obtaining the necessary statutory approvals for those units, which could include WASA and Town and Country, the title searches, and the final approvals for those. Sometimes you see a difference between approved to be booked and disbursed. So that hopefully will give you a little more clarity as to how it takes a little while. It takes some time when you're doing title searches. Of course, it takes a little while. That's a process that we have to overcome, inefficiencies in our own systems that we have to fix.
I'm a lawyer, by the way.
Yeah, it takes a little while. When you to get this done, I just giving you reality what happens with and it's across all banks, because I sit in different hats. I wear different hats and I sit across all organizations. So just the timing of those is what sometimes creates the gap between accessing the funding, approving the funding, and accessing it for the client. Okay. Welcome.
I just would like to also find out, when I looked at the 2022 financial statements of the company, mortgage finance, that is, or mortgage bank, I observed that as December 31st, 2022, mortgage commitments, outstanding mortgage commitments, was about 167.6 million. That is in 2022. And then at the end of 2021, it was about 174.5 million. So I don't know if you can tell us what it is at the end of the 31st of December 2023 as we speak, and what is the current status at this time in terms of mortgage commitments outstanding. Anybody could clarify that for us?
Chairman, I'll ask the CFO to respond to that.
Yeah.
Sure. Through the chair. Chairman, I don't have the numbers as at December 31st, 2023, but I do have the numbers as at September 30th, 2024. Right. And we do have 170 million outstanding as at the end of that period. Just to give more clarity, what happens is that commitments are normally valid for a 3-month period. This is commitments, not the HGC commitments. The HGC commitments take a little bit longer to be converted to mortgages. So it's a twofold amounts that make up that number. So what you're seeing is you can't look at the movement from one year to another, because the ones that would have been outstanding as at the end of 2021, for example, would have been disbursed in 2022. So at the end of 2022, that would be a new set of commitments that we would have given. And based on the explanations that would have just been provided by our General Manager, Mortgage Services, and our Director, the time frame to get all the approvals and everything in place is why those numbers move on a month-to-month basis. So again, as at the end of any given year, the following year, those commitments would have been disbursed. So they would move out of that category. So what you're seeing year on year is new additions to commitments in terms of new business that we would have approved and put onto the books.
Mr. Green, when someone applies for a mortgage via TTMB and they have met all the necessary criteria, what is the best time frame that you would advance for one concluding that loan arrangement with this TTMB, from the start to the end where I get my loan, I am in possession of my home? What is the time frame? The best circumstances, given all the challenges we would have along the way.
Chairman, in response to your very direct question, the best is 6 weeks. Our performance standard says 6 to 8 weeks from the application to the disbursement of the loan, and we try our best to meet that performance standard for ourselves. It's something that we established for ourselves. There are instances that we can do it in less than 6 weeks, but we say on average 6 weeks, 6 to 8 weeks.
6, 8, and you would say that is about 90%?
I would say that is about 90%, yes.
Okay. Now, one of, Mrs. Sahi, you want to raise something? One of the areas that we pay attention to is, at our level, is how can we assist your institution, the TTMB, in making it more efficient, more effective in its operation and economical, right? And this is where we look towards the officials from TTMB and Ministry of Finance to at least lend us your guidance and your support. So in fashioning our recommendations based on our findings for the House of Representatives consumption, we would have the benefit of your own submission, Mr. Green, and your team. So I just wanted to ask whether you'd like to share with us now or in writing any submission you'd like to make as it relates to assisting TTMB in becoming a more efficient and a more effective organization in delivering quality services to its customers.
Chairman, let me respond by saying that we operate in a very extensive network. Regional corporations, town country planning, ministries, etc., etc. And we do have a view as to what is needed in respect of making the system more efficient in our interest. Director Lewis would have pointed out just one aspect of it in clarification to the question, but we would like to be able to submit something in writing in support of the position that we have on this particular matter.
Okay, thank you. Mrs. Ahi, you have any, Thompson Ahi, you have any areas you'd like to address? We are going to wind on in a short while.
So there has been a decline in the interest in the 5% rate loan program because you're getting competition from the commercial banks. So how will you tell me positioning, so that your subsidized loan against commercial banks offerings could be competitive? You have any proposal for more favorable terms for first-time home buyers? I'm glad you said that because I certainly wasn't aware that you were getting competition from these banks.
Yes.
So how are you going to fight back?
Okay, so what I would say is that we have submitted proposals for consideration for a reduction in the 5% interest rate, having observed the decline and in recognition of the direct competition for that branch of the business, the 5% branch of the business over the period of review. We are waiting response. We know that it is under consideration at this time.
Hopeful?
We are always hopeful.
I hope for all our sakes that things will improve. Because we all benefit, It's our government, it's our business, yes?
The final area I'd like to just revisit is the issue of government subsidy receivable, right? Now, I'd like to ask anyone at the head table, how does TTMB, right, manage fluctuations in the subsidy amount due to variations in the cost of debt or the effective return on the subsidized mortgage portfolio? How do you manage this, Mr. Green?
Chairman, I'd ask the CFO to respond to this, please.
Thank you.
Chairman, just to say this program started in 2007, right? And actually we started disbursing loans under this program in 2008. What would have happened at the origin of the program, an allocation would have been made to the program in the amount of $450 million. That amount was advanced to the TTMF back in previously and utilized. What would have happened as time progressed, we would have built up a receivable balance. The cash for the last couple of years, we have been in receipt of $151 million approximately under the program on a consistent basis. We do liaise very closely with the Ministry of Finance in terms of the collection of this balance. And we know that, I want to say monthly, but we have been liaising with them, and we would have put forward recommendations for the settlement of this balance and how we going to treat with it going forward. So that is actually receiving the attention of the Ministry of Finance now as we speak. So what we do in the interim, we raise funding. Some of it would be short term. So when we get the funds back under the subsidy allocation, because every year in the budget we do get a subsidy allocation, that is used to repay the debt that we would have taken. So that is how we treat and manage with this balance.
And what is the current outstanding balance
Right.
from the government?
Yeah, the balance as at the end of October the 31st, 2024 is $591 million. That balance covers a 3-year period, 2022 from January straight to October 2024.
Just repeat it.
January 2022 to October 2024.
2024. But any, I know that there's a crisis of cash in this nation. And this is a large amount that is outstanding, over 500, almost $500 million, to TTMF, who have already committed itself to servicing loans on the expectation that the subsidies would come in. How is that impacting on your operations?
Well, Chairman, as I has indicated, we write the ministry monthly, and I would be happy to share that we would have just received in April and July $151 million. So the government is working to pay the balance down, and a cabinet note is before the ministry now in order to how they're going to settle the current balance of $591 million. Yes.
Chairman, through you, just to be a little more strategic. The organization, through its ALCO, which is a committee that consists of directors and management, manages the cash flow of the organization very astutely. So we've understood over the last couple of years, because in a perfect world, or if I have all the money, I can pay you everything I owe you. But the organization, to deliver its mandate, has to manage through this process. So over time, we have calculated basically what we can expect from the government. The organization knows what its disbursement is, what its repayment is on a monthly and quarterly basis. And having calculated those numbers together with what we can expect from raising capital markets, we've been able to arrange funding through various mechanisms, and that's standby credit from banks, raising money in the capital markets, and through its cash flows of repayments. We've been able to manage very astutely the funding aspect of the organization through this process. So I just wanted the committee to know that there's frequent reports. We are very aware of its debt obligation, what its cash flow requirements is for disbursements, what our receipts are from repayments, what we are raising on the capital markets. When you put that into the calculations, we have been able to meet its obligations, to manage its cash flows, disburse its loans, pay its debt, and we will continue the process and to, in my view, manage it as best as we can to meet all stakeholder obligations. But we do have regular correspondence with central government on what is outstanding and how we can bridge that gap regarding repayment of that amount.
Yeah.
Thank you.
Yeah. Well, thank you very much. I just want Mr. Green and your CFO and the colleague who just spoke. Is there any particular time frame you'll anticipate for the outstanding subsidy being addressed? Would it, seeing that we are coming to the end of 2024 in a couple of weeks' time, it seems to me from what you have said, it will spill into 2025 in terms of the outstanding sum that the CFO outlined. And I was just wondering whether in your conversation and your dialogue with the authorities, are you comfortable that the outstanding sum can be satisfied on or before the end of the first quarter of 2025? I'm just trying to determine how you are managing in this period where you have this outstanding sum and whether you anticipate that you should be able to get the rest in on or before the end of the first quarter of 2025. Mr. Green?
Chairman, in our ongoing conversations with the Ministry of Finance, and particularly as it relates to this outstanding subsidy and subsidies going forward, we have put proposals to the ministry, and the ministry has asked us for projections as to the level of subsidy required to finance our business well beyond 2025 into 2026. We provided that information, and from our standpoint, it requires a further allocation. The CFO would have advised that an allocation was made of 450 million, which we've since drawn down. And in our discussions with the Ministry of Finance, we anticipate that at the end of it, we will have come to an understanding as to how the existing subsidy receivable is to be satisfied and what arrangements can be put in place for subsidies going forward. That is the subject of ongoing discussions with the Ministry of Finance, and we anticipate that will be resolved within the next little while. We expect that it will be resolved.
Yeah, I really look forward to that matter being resolved, given the fact that you are into long-term loans, and you have to service those loans, and you are meeting your obligations, and it is unfair for you to be meeting your obligations and not getting your subsidy on a timely basis. And that is one of the areas that I think we ought to address to make sure that TTMB, now that you have merged with Home Mortgage Bank, you really continue to be on an even keel, so to speak. And that is why I've raised that point. The final point I'd like to raise is this, before my friend raises it, but the final point I'd like to raise is this. I know where your headquarters is located on Donald Street. I myself was a frequent visitor to that headquarters. And I have also been a frequent visitor in the past to your very entertaining, should I call it balcony? I don't think I should call it balcony.
Rooftop.
But you
Rooftop.
have a nice
Rooftop.
Now, I wanted to ask a question. Do you rent that out and use that as a source of rent or income, or is it used directly by you, that is TTMB, for your own internal entertainment purposes? I just wanted to clarify whether it's a source of revenue for you by renting it out, or whether you just use it as an entertainment opportunity whenever you have major events that you have to host.
Chairman, it is the rooftop of our building. A part of it is covered, the other part is open. We fondly refer to it as the restaurant because at the time that the building was designed, it was designed for a restaurant for staff members to have access to meals. Yes, it is in the main used by us for entertainment purposes. It is also the space in which we conduct our training, the space in which we have our staff meetings. As it relates to it being rented out, you'd appreciate that over the last while, as we undertook the renovations of the building, we've been very selective in those organizations who want to use it for rental purposes. We consider requests on a case-by-case basis, fundamentally ensuring that for the purpose, the use of the facilities is not one that will increase the wear and tear on this space.
But you would say over the last 3 years, you would say that you have kind of moved away from renting selective individuals, organization, and more using it for your own internal purposes.
Yes.
Right. And would you say that in the last 3 years, would you say that it has been used in a very productive and purposeful way?
I would say very much so, Chairman. Apart from from the training and those kinds of activities, we had introduced, prior to COVID, I think, a health and wellness program. So the space is used for yoga, for aerobics, and those kinds of activities after hours, in addition to it being used for training and other types of usages during the day.
Including carnival activities?
We do have an annual carnival, we call it a cooler fete, a cooler jam.
Cooler jam.
A very popular one, I must say, that is intended for staff, family, suppliers, those kinds of things. Very popular cooler fete where persons attending can bring a cooler, and we do try to put on a good show. Yes, Chairman.
Okay. I think Mr. Zai, you would like to raise a point. Tom Zai.
I was just recalling cooler fence.
Put you just on your mic. This is Tom Zai. Your mic. Yes.
Mr. Chairman, I'm sure you agree with me that it has been a pleasure having this entity before us today. And I would like it to continue to be a pleasure. So I must return to an issue. Mr. Chairman and Mr. CEO, I'm sure you're aware that yesterday was International Men's Day. Yes? And what day is it today? International Children's Day. You didn't know that, but you know about the Men's Day. You probably celebrated that. All right. I wouldn't like you to leave here today without making a promise that you are going to revisit the issue of paternity leave. It's all related, you know. The Men's Day and the Children's Day. And the fact that your provision for paternity leave is woefully inadequate. So before you leave, I would like you to make a promise that you are going to visit this in a serious way, so that, I see Mr. Chairman is whispering to you, so he has already decided that he may have nothing less than a month for the men to help to take care of the babies. Because, you know, it's the right of the child to have both parents involved in the care. Yes? And child rights is not for today, it's for the adults of tomorrow. So we want to build and do the best we can for them. So I see you smiling, so you agree with me. You don't want to make us unhappy, certainly don't want to make me unhappy, and I see you smiling as well, so we agree. Still open, very, very open, that you're going to do something positive, more realistic.
You have our commitment that we will review it very seriously and do our best to come with and to address that.
Yes.
You have our commitment.
Thank you very much. Because you are a leader in other ways, so I will hope to see that you are a leader in that way in this Trinidad and Tobago. Thank you, kind sirs.
Yeah. Mr. McClatchy, any final intervention?
Yes, Mr. Chairman. Mr. Chairman, we've been doing this a while now in these meetings, and I would like to commend TTMB for keeping my chairman blood pressures down. We haven't heard him get excited for the day.
No, he's extremely calm.
And that, I think, redounds to the manner in which TTMB has done its business. I certainly have been impressed with what you have been able to achieve, your responses, and therefore it gave little rise for concern and excitement on this side of the table. I urge you to continue doing what you're doing, and like Mrs. Thompson has said, to be a trailblazer and continue in that vein. We seldom see 2023 accounts, and at this point in time, we would probably all be pulling our hairs out and cussing somebody in our minds. But this morning was really a difference, and it shows that there are organizations out there who take corporate governance and all that goes with it very seriously. You have a product that can serve the nation well, and many of the questions this morning was geared towards letting our public know what your work and what you have been doing and what they can expect. I also think that it is a well-kept, I wouldn't say secret, because you have a lot of brochures, but if the brochures don't get disseminated, nobody reads it. So there is room for selling yourselves on the market and making sure that more people take advantage of what you have to offer. I didn't even know you had an open range, so to speak, of 6%, which was news to me, and I know a lot of people who go to all kinds of institutions because they believe that TTMB would not facilitate them because of their earning power and so on. So that was a revelation. So all in all, I'd like to commend you for the work that you've been doing. It was a pleasure sitting here and going through your data this morning, and I have every confidence that you will continue to do well. Thank you.
Yes. Yes. Thank you very much, Mr. McClatchy. I would like to bring the proceedings to a close, and in doing so, I know mergers and acquisitions do have their challenges, and especially in an environment where you have trade unions, because the whole issue of terms and conditions and making sure within the environment where you have two different entities coming together, you have to ensure that terms and conditions of the employees at different levels of the organization are reflective of the kind of justice required for progress and stability in the organization. So matters like job evaluations will become critically important in that regard. And ensuring that outstanding matters involving collective agreements are addressed, so that in going forward, in trying to establish a reasonable level playing field with the new players on board, everyone would feel a sense of justice in the whole overall process. So you still have some outstanding matters to address, Mr. Green, and it is the challenge of the human resource within your organization to ensure that there's equity, fair play, and justice. So it is something that I think you should pay attention to and try your best to address as we go forward. So we have had your predecessor, who was in another incarnation, And when she had come before our committee, Mrs. Ingrid Lashley, again, professionalism was displayed. And as Mr. McClatchy said, the reason I'm very calm today is because the past has informed the present. Okay? So if you all can continue to display that kind of professionalism, and with your new merged entity, address those emerging challenges, especially the human resource element, I feel confident that when we come in the not too distant future, you'll be able to report positively again. So on behalf of the committee, we'd like to thank you and the team from the ministry and from the TTMB for being here with us. And we all wish you a safe journey to your respective destinations. This meeting is now suspended, so we can allow you to take your departure. Thank you very much. All right, Mr. McClatchy, you could stay back. Thompson, stay back for a while.